Alrighty, what is up, traders? What's up, tycoons? I got another banger for you today. Now we're going to take a look at TON. All right, we'll break down a weekly time frame for you guys. There's an inverse bump and run, an inverse head and shoulders forming right here. And if we break this overhead supply, price targets look very juicy up to the upside, right? We have 4, 5.96, and $9 are going to be our price targets to the upside. Lots of work to be done before we hit those price targets, but we'll go over everything that you guys need to pay attention. And we'll zoom down to a daily time frame so you guys can know what to pay attention to over the coming days and weeks when it comes to major levels of resistance that we need to break, chart patterns we have forming, and of course your major support levels to the downside where you can look for potential bounces. So be sure to smash the like button, subscribe to the channel if you guys are new, and we'll go ahead and get into it. But as always, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So be sure to read through the disclaimer. If you're new to the channel, I actually started a completely free newsletter for you guys. It's called Investment Intelligence, giving out free trade ideas and valuable finance and trading content every single week. You guys can go check out the website. There's a website associated with it, and many of the trade ideas have worked out very, very well. You can see, take a look at all of them, and it's really nice. Okay, RTX is one of the most recent ones, and you can see people in the Discord hitting me up talking about how their January play, went up over 88%. Right, it actually went up much higher than that, over 100% here recently before I close them out. And if you want, you guys can join that Discord. Okay, that's where you get access to all of my different trade ideas, all my different analysis, everything I'm looking at, as well as other valuable resources. And you can get in for just $1 right now. Okay, so celebrating the new year and kicking 2024 off strong, letting people get into the Discord for just $1 using promo code JAN24. Okay, that's all caps, and that will get you in for just $1. Okay, and if you don't enjoy it, you can always leave after your first month. After the first month, that'll go back to the regular price of $10 a month. Now, let's get into the weekly time frame, okay? And it looks like what we have here, it looks like the chart's smiling at us, right? I mean, we see the eyes, we see the smile. Let's start going up. So we'll see, okay? We'll see if this plays out. All right. We have a left shoulder over here, we have a head, and we're in right shoulder territory here currently at the moment. What I really like about this is that the three major retracement levels right here, the 38.2, 50%, and 61.8, they're all in right shoulder territory. So that looks really, really good to me. If you're not familiar with these levels, okay, what it is that we're looking at are the three most common and well-respected Fibonacci retracement levels. Okay, the 38.2, 50, and 61.8. You use these because nothing moves in a straight line up, nothing moves in a straight line down. Whether you get a move up, retracement, continuation of the trend, or you move up, retrace, and let's say you consolidate and break through those retracement levels. That's how you can spot a potential reversal. Okay, so when it comes to those levels, 2.114, 1.907, and 1.7. These are all of the three major healthy Fibonacci retracement levels of support. Now, if you notice, we do have three curves right here. Well, what's this, you might ask? Well, even though we do have potentially this inverse head and shoulders setting up on a much smaller time frame, this could be actually a head and shoulders forming right here. Okay, and if we were to break through that 1.7, that would most likely coincide with this head and shoulders playing out. So 1.7 is going to be a very, very key and critical level to pay attention to. Now, when we zoom in on the daily time frame, right, we have our same levels there, same drawings, right? You can see a little bit clearer the left shoulder, the head, and then the right shoulder over here. But we've got a triangle forming right now. And so price action is just squeezing, and it's going to pop, right? Now, we would want it to pop to the upside, but there's also, always going to be the possibility it can break to the downside, right? So you do have to be aware of that. Now, we already went over the major levels of support, right? And just how we used our three Fibonacci retracement levels here, the three most common and well respected of support. We're looking at those for resistance now, right? We're taking the most recent high, we're taking the most recent low, connecting those together. And if you take a look, 2.409 has been that key level that price has just been getting stuck at, right? We tried to flip it to support over here, broke down, right? We tried to get above it here, broke down. And so, for us to be bullish, we ultimately need to get above 2.4092. Remember, we talked about that trend continuation versus trend reversal. So we've had a move down, we've retraced, but what we need to do, okay, is we need to, consolidate through here and ultimately break above that 2.4092. Now, of course, when we do, we have that overhead supply, right, that we talked about, right? It's a pretty big level because it's a weekly supply zone, right? And it's basically 2.5 up to about $3, right? If we go back to that weekly time frame, you can see that that's where we've had sell-offs in the past, and that's where overhead supply has been established, right? Here, 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 okay? And then we revisit it here and here, but look at how many times we've tested it, right? We've tested it, over 5-6 times on that weekly time frame. And so the more times you test a level, then the weaker it's going to get, right? And so, what we want to see is an absorption of the overhead supply, all right? And a supply imbalance, a supply zone is just simply an area where there's much more sell orders than there are buy orders. And so what you have to ask yourself, the question is, well, the people that sold here, the people that sold here, 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 and here, are they replacing those sell orders, right? Because you have to think they're getting filled, right? The sell orders are getting filled, right? Prices moving down. And unless they're replacing those sell orders and there's new sell orders coming in here over time, those sell orders are going to continue to get filled, eventually to the point where there's not enough sell orders to push price lower and there's more buy orders than there is sell orders. And that's how you break through resistance. That's how you break through supply zones. All right. A very simple concept to understand. Now, what you want to be cautious of, okay, especially on the weekly time frame, is this MACD right here. Okay, there was a bullish crossover here, and you can see how the price went up very, very well. If this white line crosses below the red line on your weekly MACD time frame, that could be well, that is and would be a weekly MACD bear signal, okay, and sell signal. And again, that's something that could get this head and shoulders to play out. All right. So you want to be cautious of that. You want to pay attention to that. That's something that will be developing and we should know very soon over the next coming weeks. Now, when we zoom back into the daily time frame, okay, we talked about the triangle. We talked about, the overhead resistance level that we're paying attention to right now. And at the end of the day, remember, this curve right here is our right shoulder. So, even if we were to pull back all the way down to 1.7, that's still healthy territory, healthy retracement territory to end up continuing the uptrend, right? And put in that right shoulder. So that's really what I'm paying attention to and watching right now when it comes to TON. Let me know what other cryptos you guys are looking at, okay? There's so many to trade out there. There's been trading has been fun again, okay? If you didn't know, if you've been sleeping under a rock, the crypto bull market is back, right? Crypto winter is over. Many coins, many tokens have gone up thousands of percent in 2023, right? And now 2024 is starting, and we'll see if some of that momentum can continue or if 2024 is going to be, a little bit less rewarding than 2023 was for a lot of coins. I'm really excited, though. I think you guys should be excited as well. And I definitely want you guys to pay close attention to this one over the coming weeks. All right. Now don't forget you can sign up for that free newsletter, okay, using the link in the description. I'm not going to spam you with 5 to 10 emails a day, okay, bragging about all these different trade ideas and one of them hits. It's about quality over quantity when it comes to the newsletter. So I'll only send out about 1 or 2 a week to you guys. And don't forget you can join the Discord for just $1. Okay. Promo code JAN24 will get you into the Discord for $1. Right. And, we'll be running that all throughout January, to start the year off strong. We want to let as many people as we can join at a very, very cheap price. All right. Thanks for watching. Smash the like button, subscribe for more, and I'll see you in the next one.